Hello, everybody, and welcome to the Plus3 Futures and Commodities show. On this week's show, we're going to cover the fact that the market is respecting certain important levels and why that is. We're going to talk about major turns that are coming in some markets next week. And we're going to end the discussion today reviewing the multiple time frame dilemma and how you deal with that. It is Friday, June 7th. A little after the close. My name is Ben Maldonado, and as always, I'm here with my partner Barry Hederachi. Barry, how we doing?
Doing pretty good. Doing pretty good.
Yeah, it was a quiet but under the surface very eventful week, and without any delay, let's get into it. One of the headlines we talked about was the market is respecting important levels, and good for us. It's respecting our levels, and let's talk about why that is and why these levels are so important right now.
All right, let's start with the E-mini. One of the things we left off with last week was this 5,200 level.
Mhm.
Remember that? It was really the only thing.
52 and 53.10 were the big ones.
Yeah, which we actually that Friday, by the time it closed, we had tapped both sides.
Yep, no question.
And well, the thing we talked about the 52 was the fact that we hit the one by one
Held it.
and the 52 about the same time, exactly where it
Hmm.
crosses.
Hmm.
And we talked about how, that's not just something to ignore. And
And not random.
it's not, no, not rarely is it random, right? And the fact that it held it, and if we can somehow following that, be able to get above this 144 line, that, market's going to be in a stronger position, no
which
question.
is which is where the 53.10 is in that area, right? Because it's the
Right.
eighth, it's
Yeah,
the
that
eighth
was like the
above.
zone, right?
Yeah,
So,
right.
and ideally hold above the 144 level, but yeah, 53.10, anywhere in that zone above that is good.
Hmm.
And lo and behold, what happened was, by the time I think we were recording before the close, and we had that
Crazy
dramatic
rally.
rally into the
Right.
close. And well, so we closed above the 144.
Yep.
So then the idea is, can we maintain up there? And what we said was, if we can hold above the 144, the market's definitely in a stronger position. And what
Right.
happened? Every close after that was above that, not only above it, and very close to 53.10.
Hmm.
And when we look at that 30-minute chart, it was very, it's right around that 53.04 level we were watching there.
Hmm.
And there you go. So we talked about that, bounce here. That was the initial thing we noticed. Got above the 144 and able to hang out above that. And then we got the move up into 53.78, which is really the next level I have. So we'll talk about all of that in a little bit and what this 55.66 is doing up here.
Right. And
So
now it's a matter of we got to sit on top of it on any pullbacks.
absolutely. So now, yeah, 53.10 is really the level, can we hold up here, up in here?
Hmm. Hmm.
If we do, then I would say the market's definitely in a stronger position. And even if it's above 5,200, I would say it's firm, but because of the cycles and the timing that we have, if we take out, let's say 52.82, let's say,
Hmm.
that should definitely send up a couple of flags, because that we do have some cycles that lined up at this high, and also
Hmm.
coming into next week, any kind of a high going into next week. But the
Sure.
main thing, if you're looking at the daily chart and you're really following through with the one by ones, I mean, it would have to come down and take out it pretty much lines up, 13, 12, 13th. It
Early next
really,
week. Yeah.
yeah. So it lines up perfectly with where the one by one is going. And, if it breaks, we'll have to, we'll have to watch that.
And
We
add
had
this into the mix. We had the Rebel Yell cycle yesterday.
yesterday. Okay. Okay.
Yep.
So things are really not just this market, but it's like, it's
A
like you
lot
pull.
of yeah, a lot of markets got hit with it.
It's like you're like, yeah, it's like pulling the trigger, but you're pulling back. Your tension is mounting.
Yeah,
So,
yeah.
and the longer we hang out here, and all these different time cycles are expiring, that's what happens. There's a lot of tension. So that being said, let's take a look at, well, the normal charts we've been following. Here's the cash chart. This is the 144 that came in. We've been following sort of the trail ever since that. So we corrected, went back up, got on top of it, a little bit of a push, but generally speaking, we've been holding above that, right? I mean, it's easy to see
Yeah.
with the line there,
Mm-hmm.
which means, hey,
Cash is a lot clearer, isn't it?
yeah, now it's, yeah, it's getting clearer.
Mm-hmm.
So anyway, what's not clear is the Dow. Look at this,
Oh boy.
like what's happening here.
That's chop since looks
Well,
like chop since almost January, right? Between
and
that
also
half square.
we're making lower highs,
Mm-hmm.
and we're kind of coming into a little bit of a triangle here. And this is starting to look like some kind of a distribution.
I was going to say that's not quite bull market behavior there, is it? I mean,
Not for the Dow, not
look
when
at where it
everything else.
was look at where it was in January and look at where it is now.
Yeah, yeah, yeah. Pretty
That's
much the same
essentially
place.
sideways. Yeah.
Mm-hmm. So, I'm not a big intermarket person, but this should mean something.
Mm-hmm.
um, it's not making new highs and making lower highs. S&P is making higher highs. So I'm just wondering what kind of follow through we're going to have on the S&P. It's just
Right.
something to watch. So one of the reasons we're really watching these levels really tightly and looking at patterns and looking at the squares and not just jumping in is because not everything is perfectly in line to do that.
Mm-hmm.
Especially
Mm-hmm.
you can see the chop and the sideways we've had just last couple of weeks, right? And so with the Dow not really following through, we really have to watch it closely.
Barry, I'm just doing it from memory, but I'm going to go back and look at it. It kind of reminds me remember in the spring of 2000 when the Nasdaq was ripping and the S&P and the Dow really weren't, participating.
Mm-hmm. I remember that,
Oh,
recall that.
yeah. I mean, again, I'm just doing it by memory. I haven't done the research and looked at it, but it's worth looking into and seeing if we're getting similar type behavior.
So the thing here is if the Dow takes out this 37, let's say 37,900,
Hmm.
that would be a big deal. So we really want to watch it. And long as we're above that, sure, they can keep it going because you can clearly see we're working this half square,
Yep.
you know,
Since the beginning of the year, that half
yeah,
square.
basically, we started at we broke out of the square in December.
Yep.
You see
Yep.
that
Yep.
144, got on top, made it all the way to the half square, sold off back to the square, went back up to the square, half
Yep.
square.
I mean,
Now
that's
we're,
a beautiful, beautiful geometry you got there because it's really capturing price action.
yeah, really well. So essentially, Dow really didn't go anywhere. I mean, like you said,
Hmm.
we were back exactly where we were January, February.
Yep.
So something to note, and probably part of why we're not getting all excited. And the other part is probably because of how choppy and sloppy it's been all through here
Hmm.
last couple of weeks.
Hmm.
But we managed to, keep our heads above the water and call these out. Let's take a look at the 30 minutes since we look at that quite a bit. And this gets posted on Twitter every day.
It's funny. I drew an expanding triangle on my 60-minute
Yeah,
this
I mean, look at the
afternoon.
price actions
Oh,
exactly
it's
like that,
just
right?
killing everybody.
So first of all, if you take a look at the entire week, this is just the most head spinning sort of price action.
Yeah. If you
But
play in the breakouts, you got crushed.
yeah, yeah. But we got basically got the level and we had some fuse lines that came in up in here like 53.72. And that caught the highs. Anyway, what I wanted to do was just talk about what happened this week. The big thing was early on was the breaking of this triangle. We called that out
Yep.
early on.
Yep.
And once that broke, we were looking for some directional move.
And you got
And
it.
right. And before that, we talked about 53.04. It needs to hold above that. And that was textbook. We broke out, clean breakout, held about
Tested.
53.04.
Hmm.
Then we said momentum's going to pick up after 53.25. And boy, didn't even look back right to the
Yep.
50% of the square. So all that was kind of easy. And then it was just chop, 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 chop. And we weren't going to do anything till we settled above this 53.64 level, which it really couldn't do, right? We kept tapping it, dropping, kept tapping.
Hmm.
And today with the news volatility, it's still weren't able to really hold above that. And then it just sort of sold off. So here's the 53.04. You can see that's the number level we're using on the 30-minute.
Mm-hmm.
And if we jump to the daily, so it's right, a couple of points, it's a couple of points, 6 points below 53.10. So
Yeah,
it's right there. It's
right in
right
there.
there, and you can see how it stalled right in that area, right? You can even see it on the daily.
Mm-hmm.
All right. So going to next week, what's the deal? We have some, there are some time cycles that are lining up, I should say. If you
Mm-hmm.
go to, well, let's take a look at the 60 cycle. If you look at the 60s, and I always like to, it's good to keep going with another, with the major lows, but it's also good to watch from the last low, how are we
Mm-hmm.
doing compared to the last low?
Sure.
So we have a 60 potential 60 by 60, but at least a 60 calendar day count going into like June 17th, 18th. Okay, that's one thing. And that would square out around 54, 53 on the E-mini. So these are
Mm-hmm.
the levels you guys need to watch. I mean, this is the video, so you guys can pause and write that down. And if you go to the 72, we had 36 here, not much. There's really no traction there. And if you go to the 90, it gets a little bit more interesting because now
Yep. Mid-July.
yeah, well, that, right? But we have a
Yep.
45 run right here,
Yep.
which is, because the weekend, sometimes you can move it out,
Sure.
same price, but you move it out to the next active day. And if you do that, yesterday becomes 45. And, if you look at Gann rules, 45 to 48, 49 is the dead zone, right? So, as if we need more things to look at. But now we have a 45-day run, calendar day run, and we need
Yep.
to watch that. And we ended that in a high,
And I love that the Rebel Yell cycle was yesterday too, because it has
exactly
nothing
on the
to do with
45, right? Yeah.
the 45. Yeah.
Mhm. And the thing, and we know this thing has traction because if you look at what happened at the 30, we ran up to 30,
Mm-hmm.
then we
Pulled
came
back.
back to 30 degrees up, 1/3 of the thing, right? Square.
Yep.
Went back up into the 45. So this is a big deal because it's the 45. All right.
Mm-hmm.
So that's why, it's not like we're putting it on every low. It's really the here and here, right?
Yeah. The
And from
major
here,
ones.
when we get a 45 like that, really want to watch that to see what happens. So
That's good.
what needs to happen next week? What needs to happen next week is if we take out Friday's low, we definitely want to watch that cautiously with the idea that we could be turning down. Okay.
Mm-hmm.
Friday low, meaning what we're looking for is a reversal. So let's say Monday we make a higher high and a higher low, then Tuesday we'd be looking for the Monday low to be taken out. That would give us a
Mm-hmm.
reversal.
Mm-hmm.
Much past that, I'm not so sure. But then we have this FOMC stuck right in the middle of all of that. You
Right.
know what I mean? It's just it could get messy, but watch the level, this 53, let's say 53.30. It's going to be important on this basis, the daily chart, to see how
Mm-hmm.
we settle above or below.
Mm-hmm.
It's something to watch. And the reason we are really concerned with the S&P possibly turning down, well, because of this, the 45 by 45, that's one.
Yep.
Second is because the Dow's really not showing a whole lot of enthusiasm. We just kind of couldn't even get up to the 1/3 of the square here, while the other guys are making new highs.
Mm-hmm.
So it's it's a little bit of a yellow flag, I'd say. So those are the things. That's how we're looking at it. And again, as long as we're above this 52.78, 52.80 area, we're above the 144, market's okay. And given next week, being above that also means we're above the 1 by 1, this angle.
Mm-hmm.
As long as we're above that, everything's kosher. But if we take that out, then we have
Caution.
then we got to watch it because we have those other cycles in place. We could
Mm-hmm.
turn down, that's
Mm-hmm.
basically what I'm saying.
Yeah.
Okay. All right. So
That's good coverage.
yeah, thanks. Yeah, we need to, you have to look at it from all the angles. So now we looked at the calendar day with the 45, and here, so that lines up to be a 36 on the square of 72. So that's the other
Mm-hmm.
thing that's coming Monday, Tuesday, is that we're going to be
36 on Monday. Yep.
36 out
Mm-hmm.
in time. And that matters because, market does run on 36s. So, here's a 108 that ran perfectly. 336 is right up into that. So
And if you want another marker, go high to high.
yeah,
You
we
get
did 36 here. Yeah.
49 dead zone, high to the high today
Okay. Well, there you go. There's
from
another.
the April high.
Mhm. So these aren't from like random places. These are from really key places. I mean, the
Yeah.
last high, that
Yep.
low, and this
Yeah.
low. So we're kind of working with 3 points,
Hmm.
and I don't think that's not too much if you're studying Gann. That's,
No,
you're getting off easy.
here's your
All right.
weekly.
Yeah. Why else are we a little bit concerned here? Because we really haven't settled above this 288.
Not yet.
That's the other thing. And where is
Mm.
that coming from? That's coming from the low in 2009. We
Pretty
did a
important
month.
low.
Yeah, I mean, super, right? And
It's what
last,
kicked off the whole QE thing. That's why I love that low.
right, right, right. Yeah. And look how this low came in exactly on the 576 weeks.
Perfect. Perfect.
Four squares perfectly. So this is
Yep.
why it's a master square, right?
Yep.
You can see how they come in exactly on the counts.
Yep.
Okay, so the reason we're watching this area extra careful and looking for any possible signs or patterns is because of this. We're up 288 degrees and we're in time. So that matters.
Hugely important.
Yeah, hugely important. And on top of that, I was looking at, I just can't let go of this Gartley over here because
All right.
when that works out, that's just going to be classic because
Mm-hmm.
it's so huge. Multi-year
Yeah.
Gartley. Normally,
Yep.
I don't have a lot of faith in that. I mean, it's so big. How can anybody miss it? It's so big. Can it still work?
Right.
Well, the other thing is you don't see him that often, right? I mean,
No.
but when you put it on here, and this is the tool set that we developed, the 5-point tool set in Wave 59.
Mm-hmm.
So when you drop in in a
The
fork,
fork. Yep.
using the 5-point squares, the Gartley points, look where the middle of the fork is. It's we're tapping these perfectly.
Mm-hmm.
And what I know is when this happens, it's very difficult after two taps for this to really overcome that and continue to move higher. You know what I mean? The
Yeah.
momentum is just not there. It needs a correction and then blah, blah, spend the time,
Right.
build value, all those good things. So that's the other thing. Just visually, the pattern just doesn't look like it can kick it into gear. I mean, like what's going to happen to make new highs off of this? It would have to be something really damn good, really special, you know?
Yeah, and the whole I think about the Dow argument that you're making, which is very strong, is that look, if this was a liquidity driven bull, everything should be flying,
Mm-hmm.
especially the Dow, because it's just 30 stocks.
Right, right.
And they haven't been able to get that one going yet.
Yeah. And if you look at the ideal target,
You're in it.
Gartley, we're in it. Yeah, that's the
Mm-hmm.
other thing. So it's like,
Yeah.
I mean, these are the two most important levels. I mean, the box covers brackets 4 key levels, that happens most often. But these, but
Middle two.
the fact that we're stuck in there, that's the thing, right? And
Mm-hmm.
and if it was just stuck in the midair, okay, fine, we can sort of not give it so much weight. But then we go back to the square chart and we see, well, it's not just anywhere. It's actually we're up 288 degrees, which is a big deal for this chart. So that's the point. And because of all of that, we know, I mean, at least there's a sense that there ought to be some kind of a correction before it gets on top of this 288 because it's going to take a bit. It could be some big, huge news. I don't know. Sometimes, news items can do that.
Mm-hmm.
And you can see what it took to get above the 144 here. Came close, 2018, correction, came about 2019, correction, again, correction, right?
Mm-hmm.
So it took so many, like 3 or 4 tries to make over. And then you can see how the how tight the bars were going up, right? Very, very,
Yeah.
very, very tight going up into that. So it's the same thing here. So I'm looking for it to see how it's going to settle. And you can see we haven't settled. We're right smack in the middle.
It's funny too, Barry. When you were talking about that, I was thinking, okay, put your hat on and think like a criminal. What would be the thing that would catch most people flat-footed is if they run it up, only then to take it down. And then you just went over the example in late 19, early 20. That's exactly what they did. with those tight little green bars, they ran it up for, weeks and weeks and then pulled the plug and then,
Right.
did the rug pull.
Well, that's why we're watching.
Yeah. Yeah. Yeah.
And actually this high, we nailed this high. I remember this. We got that high. I think we started calling it about here.
Yep.
And then we got that here because we were watching this entire complex, you know, developing. So that's that part. Anyway, I just wanted to sort of take a little bit of time to explain why we're harping on a potential, change here, because we are stuck in a very important time and price, even basis the weekly. So you got to pay attention. And we looked at all the monthlies last week, and you saw a lot of monthly things are lining up here, not to be ignored.
If you trade the E-mini, do yourself a favor and watch the section we just did on the E-mini at least twice. There's a
Right.
lot of really good information there.
And catch the monthly show last week, because
Yeah.
you covered everything, and I think that's knowing where all those points are. It's really
Huge.
important if you're really
Mhm.
trading,
Yep.
or studying, one of the two.
Yep.
All right, let's move on to bonds.
Which had a very interesting day today.
Yep, yep. And
It, it
go
the
ahead.
price action today sure looks like we completed something, even though we missed that ABCD target by a whisker.
Yeah, well, I think we basically got it
The
because
base, that's the way I'm putting it. In my book, we got it,
yeah,
especially given the price action. I mean, we were down almost 2 points, almost
yeah,
two full
it was good.
points.
And look, we were, when we were down here, I said, look, that looks like a higher low.
Hmm.
Looks like we're going to go up and at least test at 1916.
Yep.
And there it is, and we're reversing grand style, right? So
Yeah.
it's an outside reversal. So
Yeah.
okay, so what happens now? I think given the strength of how this area held, um I remember saying 19 and a half last week. I remember saying that. So we're
Yeah.
looking for this area to
Yep.
hold. So
Yep.
now, um
No, you drew the ABCD in on the show because we know that was the target.
yeah, I was during the show. That's right. So we have
Yeah.
the ABCD. Well, we're looking for a correction back down to check the middle,
The half square.
half
Yeah.
square, which would be 14 and a half or so. But this is going to have to resolve. So once normally an ABCD is really the correction in a down move.
Hmm.
All right. So if this is the move, we came down 90 days, did an ABCD correction, and we would expect it to continue to the downside. So that's, let's say, the expectation, but
Hmm.
we did nail the corner. So there it is. So this is one of the things we were talking about the opening, about a lot of markets hit our numbers and flipped around, it just turned around. There's not
On a
missing
cycle date too.
on a cycle day. So we're good there. So let's take a
Hmm.
look at, and that's the thing, when markets are doing exactly what you're thinking, there's not a whole lot to talk about,
Right.
really,
Right.
right? Okay, so if the
Wow. Look at that trend line hit. Nice.
exactly, so if the 14 and a half wasn't enough, it went exactly the trend line we drew last week or the week before, I can't remember, but
Hmm.
so there it is. And what's happening on the weekly, which we brought up last week, is that we're getting this little triangle that's really tightening up.
Hmm.
And obviously that can go on for a little bit longer, but break of this is probably going to start the next leg.
Hmm.
So we'll see which way it's going to break. I mean, we can call it out, but let's just let the market do that and go with the levels. And it makes sense that we come back down, and now that you guys can see the weekly, it makes sense to see it come down and check around the lower side of the triangle,
Yep.
right? So I think that's what to expect. It's reasonable.
Hmm.
And so we'll go with that.
That's a good look.
Let's move on to crude.
This one's interesting. It's one of my highlights today.
Well, yeah, and it kind of did the things we were looking at.
Another higher low.
Another higher low, and we were looking at the 73.50,
Hmm.
and we got it. Not only did we get it, we reversed and we bounced off of it. So it looks good. It'd be nice if it can hold above it next week, come back down and make a higher low.
Hmm.
That would be good. Now, if you guys haven't caught if you trade crude, go back and check the old shows. We were talking, we called it getting stuck here. I think there was some kind of a ABCD coming up into here.
Yes.
And then we talked about if it loses 88, the next stop is really 73.50. Sure, it took a while, but there we are, right? We got there. So the question now is, listen, this is really good support. If we can hold here, that could be it for a long time.
And you know
Um,
what else, Barry, is everybody's like bored with crude.
mm,
Nobody's talking about it. Nobody's interested in it because it's
mm,
just been, I mean, look at, for 6, 7 months, we've been sideways
right.
and nobody's talking about it. They're more interested in Nvidia and GameStop and the
Mm,
options and all this other stuff. So that's just when this thing really, really will. We talked about
yeah,
this in the commodities, man. When they go to sleep, that's when you got to pay attention.
exactly. Especially when nobody's talking about it.
Yep.
Especially at lows. At highs,
Hmm.
when they start talking about it, you get the hell out of there.
Cocoa is a perfect example.
Yeah. So yeah, so 73.50, we really want to watch it hold that. It's a really important level. And if we can do that and start making some higher lows, 88 is we're going back up there. And
Hmm.
if we can take that out, then I think, you know, there's a lot of upside left. The issue is we can talk about levels here, but the timing is a little bit of an issue because time can compress and expand. So, it's a little tricky to get, when is it going to turn? Because when you're going
Hmm.
sideways, you really can't do much. You really need some kind of a break to go off of,
Right.
you know. Um, yeah. So we'll look at that. This is a square of the range I think I was playing around with. Yeah, it's a
Yeah.
square of the range from here to there.
Hmm.
Anyway, you got the levels there. I think we should be good with that.
Hmm.
Let's look at the weekly crude and hop through the rest of it. Weekly crude, we had this box drawn up,
And look at that.
and look at that, right?
Bottom of the box and bounce.
Yep. So we talked about this 81, the middle of the box being, 81, let's say 81. And that long, it says below 81, it's going to be weaker, and we can expect it to go and check the lower part. And if it's above that, we can expect it to go higher. So we went down and checked the lower part. So I think there's good support there. We ought to hold that. And if we don't, like I said, we're coming back to this really huge support area, 64, 66 level. That's where this band is. We've been trading this off of this for years.
Hmm.
So, I mean, that would be a very serious kind of a push down, which means we're getting ready for a hell of a move to the other side if we get down to here,
Hmm.
uh, which could happen because, we did this triangle did break to the downside, by the way. You guys see this
Sure.
triangle right there?
Yeah. Yeah.
So I'm kind of watching that with one eye to see what happens there in
And
this
we
mess, right? Overall,
and
you
we
can
know
see,
commodities love to do that, right? False break one way and go the other way.
yeah, every day, right? They'll do it all
Hmm.
day. So
Hmm.
here, since 22, we've been in this box. And so you have to be a little bit careful and look for the pointers, but we've been navigating this fairly well. And so let's watch it. This is really good support. So 73. Otherwise, we're going to get down to 66 is next. So there's a lot of space in between. Let's see how it works
Hmm.
out next week.
Hmm.
Um, and all we have to do is just trade in the direction coming off of that. I think that's makes it simple enough.
Yep.
All right, let's move on to look at that.
Yep.
So something spooked gold, huh?
That cycle seems to have spooked it.
Yeah, there we go. That's what spooked it. But not, yeah. Well, I mean, that's what happens, right?
Right.
Price will hang around until cycle hits, and then boom, everything gets activated.
I mean, draw an ABCD in there and it looks like a decent target
Down here,
right at the half square. Yep.
yeah, that's a good idea, especially after it gets triggered. Yeah,
Hmm.
well, a little bit, yeah, it could get down into that zone.
Right.
Yeah, I think now half square area, this at least to come and check this low, which would be right about where the ABCD goes.
Hmm.
Makes sense. And ever since we couldn't get above 144, we've been talking about gold to be, it's really weak. We're not looking to buy this now. We're gonna wait till the cycle finishes, and looks like it's
Hmm.
going for a finish. If it does, great. So we'll wait for that. You know,
And you and I both called that false break and said, "Hey guys, something ended there. We just got to step aside and wait."
yeah, 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 yeah. You gotta, we have our reasons to be cautious. We have the
Yeah.
squares.
Yeah. Yep.
So yeah, that worked out fairly well. So okay, getting back into the weekly. Well, this is why we were cautious because
Hmm.
we're pushing up against it 270 degrees up from a huge low. If you guys just want to see it, if you're watching it every week, fine. It's still not bad to look at these. And you can see this, we're going from 2001 low. We're
Hmm.
270 degrees up. You can see why it stalled up here for a couple of months. Not surprising. And that's why we want to kind of cool off, right? And let it breathe and settle up and get ready to go again.
I mean, long term, like we showed last week on the monthlies, we're still super bullish, but it's
Yeah.
just,
Yeah. We
you
don't
know,
want to finish this. Yeah.
you think like a trader, you got to let it cool off.
Yeah. And the goal is not something you can just trade every day.
No.
You have to have it settle up. Speaking of things coming down, well, here's
Yeah.
copper.
Perfect. Yep.
Yeah, that was good. We called the high, we called the square, called everything. It's almost, I don't even know what to say anymore. Uh,
And it's almost completed in ABCD. I was looking at that one today. It's just about
right.
there, a little short of
And
the target.
and the thing with copper is it's almost is a little below, right? Yeah.
Mm-hmm.
So thing with copper is we did square out. It did an ABC to the upside. I think that's what called the high,
Yep.
along with the square. And then we were looking for some kind of a correction. We talked about the quarter square holding, that being something positive. Copper is very strong if it did that. But a normal correction would, coming down to, 454, 50% of the square is not unusual. It's not unusual. It would be normal to
Mm-hmm.
do that. That would be 50% of the square. Now, if you take 50% of the move, should come around to about the quarter of the square here. That would be about 430.
Yep.
So, and we have structural support here, right at the
Yep.
430 mark,
Yep.
and that's about 50% of the move. So I would say 430 looks about right. And not only that, we have a 1x2 going across. So that could all work out nicely next week if we can get down to there and hold.
Sure.
So that's what I'm hoping. I think the way the whole structure looks, it should hold here. 430 should be like a good point to hold.
Mm-hmm.
And if it does, that's a good sign that it's going to start getting traction to the other side sooner than later. All right, next one is the weekly copper. We talked about this during last week, I think the week before, how we had like a couple of 216 cycles in here,
Mm-hmm.
216 recycles, and like this is meaningful. And if it is, we could come, basis weekly coming down all the way to 420 would be perfectly normal.
Mm-hmm.
Put it that way. And of course, it's copper, so it's not going to stop exactly at the line. It's probably going to go down to 4.
Right.
That's just how it is. So
Mm-hmm.
a little bit of slop built into copper. Anyway, it's not done. Are we shorting this? No, not really. We're a little bit
Let it correct.
we're not that brave.
No.
But I think there's a lot more upside once this finishes up, like all the rest of the metals. So we'll
Agreed.
wait for that. And let's move on to the dollar. What happened? Well,
Continues to wind up.
boy, it's yawning time, like you said.
Yeah. Yeah.
So we had this 30 going up at 30. We kind of squared out there on that
Yep.
leg. We were looking for it to come back. So basically we did 60 low to low.
Mm-hmm.
And that's a decent place to start. Finish up that leg.
Mm-hmm.
60. But I wanted to show this. Wanted to get rid of this, hide this thing for a minute.
Mm-hmm.
Remember we drew this line last week?
Yep.
And basically talked about, if we can stop above that, we're still good. That would be the support level.
Sure.
And sure enough, we were there all week. So
And then bounced hard today.
bounced hard today. So it looks like we're good. It's we're ready to move again. I'm not sure about the speed. It might be snail speed, but at least it looks like we finished up. We came into, basically we're 30 down,
Mm-hmm.
30 up, 30 down. That's okay. And then we're also came up into support and it held, buying came in, and that support line we talked about last week, it goes, fairly far back. You can see it's here, up here, there's a lot of built up stuff there. So that looks pretty good. So dollar looks like it's ready to move, but, yeah, I think long as it's above that support level, you can take the long side trades.
Mm-hmm.
Let's move on to the weekly. Weekly dollar, big triangle. And, we have this resistance level up here. So we're kind of trapped in a way. And if we took out the 1/3, I think the thinking earlier was that, we're going to build a triangle. If we take it out, we can pretty much count that we're going to finish up the triangle in some way.
Mm-hmm.
So we got to keep an eye on that. This could be a false move going into a FOMC and then tanking after that. So if that's the case, watch today's low. It's going to be really important. Know what I mean? Because that's
Yeah,
the
and a
natural.
lot like we talked about with gold before the breakout. If you look left, look at where the triangle's forming.
Mm-hmm.
It's on top of those previous highs. 2020
Oh,
high, the
back here, right?
27, yeah,
Yeah. This is
2017 highs.
I think this low is good, and so is this low.
Hmm.
Because we have a higher low, obviously, right? And what happened is we couldn't quite get up and make a higher high, so automatically we finished up with an ABCD up, the green one,
Hmm.
at pretty close to our level, but definitely the 50% of the square. And because we couldn't make a new high, now that's when the triangle idea came in. I mean, even if you draw it from here, right, it's still a triangle. So it looks like we could be there, and we'll see what happens, when we get close to breaking out. But for now, it looks like it's still kind of consolidating mode, not quite ready for the upside yet. We have signs because it's kind of holding the levels. That's about it.
Hmm.
Just to be realistic about it, especially after watching this. So, and
Yeah.
we're really tightening up, So that means it's coming. Some kind of a good move is coming. But we really have to be patient till it shows up.
Yeah.
Yeah. Anything you want to add? Anything else?
No, 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 that's good.
Okay. Next, we go on to, you can see I was playing with the Gartley tool last week,
Hmm.
and just kind of, see what's
It
happening.
helps. It helps to see what's going
Yeah,
on.
it helps because I'm looking at, otherwise you just see this one big block, what's happening. Well, there's a lot happening. Anyway, I think the thing for you guys to watch would be to look at the 108. This is the level we've been watching, calling it to be strong above it, weak below. And of course, now we're back on top of it again, and we'll see what happens next week. One thing to notice though, we had this trend line going, high to high, and now we broke out, came back to test it, bounced. Now we're back on the line again. So we'll see if we're going to bounce along the line. You know what I mean?
Hmm.
And maybe work into this um, equilibrium line. I mean, it's possible because it looks all pretty even. And if it breaks that, that then it would start the whole next leg. But without trying to mix a whole bunch of things, let's just go back to our 108. And if it holds, great. Then it's going to consolidate a little bit longer up here. Otherwise, I think this high might have been it, and we'll work it down. And that
Hmm.
was 36 degrees up, base roughly. So
Yep.
so it seems like it's a leg that completed something. Yeah, that's all I have for that. Let's go back to the weekly. Weekly, this is what I mean by the big block, the big blob.
Mm-hmm.
So again, there's a big weekly triangle setting up here, and it's a little bit more clear than the dollar, right? You can see it's a very tight, visible one. And
Yeah.
you can see how the 108 is really almost the center of that triangle, dividing it in two. So that's why we're watching it. Not much to do till we break out. It doesn't matter what kind of tools you have. We just have to work within that. Didn't quite get to the upper line. Let's see what we do here. 108, like I said, it's weaker under it, and it's kind of firmer above it, stronger above it. So that's all we have. I'm not super thrilled with this, but you guys can use the daily levels to figure out which way you might want to go. As we leave, it's not going to stay there. So as we leave 108, I think the next move is to catch the other, that leg.
Hmm.
Not much to do. It's just a really narrow market. And you're covering natural gas, yes,
And crude.
and crude. Okay, so
Just
great.
want to show a couple
So
things.
basically,
Yeah.
yeah. So just here, not much. Just same chart coming off the highs. We did 135 down. We were looking at support here. Now we're up a quarter square. Is really the deal now is getting above the quarter of the square. If we can clear that at this point, I think we're good. And I'm sure you're going to cover the rest of it. So we'll wait for
Yeah.
that.
Yeah.
And the Hang Seng,
It's trying to hold.
it's pretty good. If it can
Yeah.
hold here, it's really good. Otherwise, we're going to drop down into the quarter. But what's impressive now is it's really trading between the 18,054 and the 50% of the square. And up until we get above this 50%, which is 18,750, we're not going to really build up a whole lot of momentum unless we really dip down into this level, up into this support. But that would be really pushing it. But I don't see a problem with it. It just seems like a normal, very good level right there. You can see how it's built up over time right there.
Mm-hmm.
But long as we're holding above 18,054, it's showing some strength. So that's that. You want to see something cool?
Yeah, for sure.
So here, right, this is the basically the Bradley indicator. And one of the ways to, so anybody's watching all the way down here, they're going to learn about this. One of the ways to use it is not really to watch it follow the Bradley, which it does like every once in 10 years,
Right.
but it's really about watching to see if the turns on the Bradley lines up with turns on the market. And
Mm-hmm.
that happens more often than not. And it's just something to watch. And I noticed we have one coming up June 11th, you know? So
Look at that.
I'm like, what else do we have coming on June 11th, 12th? So,
Yep.
so
A
it's
lot
something
of
to
stuff
watch,
next week.
what's that?
I said a lot of stuff next week.
A lot of stuff next week. And this, the Bradley indicator has some, it's got some merit. I mean, some years is nailed the entire year. So,
Mm-hmm.
and, then we have another one. Next one's in July 3rd. After that, we really don't have a turn all the way up until September. So
Mm-hmm.
it's not that often. And you want the turns that are coming clean like this, not like, over here.
Right.
I just want to point that out because we were talking about next week and a lot of things are lining up. So just to say that, hey, even Bradley's lining up. So
Mm-hmm.
we'll see what happens with that. All right, let me put it back to you. We'll cover the commodities and other things.
Great.
All right, thanks. I don't know. I think I'd feel better if it just went up and just tapped that and be done with it.
I know, right?
It's just like, what are you doing? I think it's going to have to. I don't see how we can't get that close to 270 and not go up and tap it.
I know. And that's one of the things that I was looking at because we had the 144 by 144 right in here.
Mm-hmm.
And I said, okay, let's see what's next is the 180, which takes us into, funny around the turn of that Bradley, July 4th,
Mm-hmm.
would get us 180 by 180 if we got up into, this 19,900 area.
But your natural level around that 270 looks good. I mean, that seems like it it wants to go there.
Yeah, that
It lines up,
it looks like it wants to go. Look, if we review, what we said was, we came down, we found support on the half square here, tested the full square. This is when it would look like, oh, this thing was going to turn off of this move and we were going to
Right.
go down. We
Mm-hmm.
pulled back higher low, got above it, then we battled here for a couple weeks. We've now pushed above this half square. So the next logical target is the full square, and that gets us, around, call it 19,370
Mm-hmm.
in that area. That sure looks like the target. Of course, we have, timing coming in Monday, half square timing. And then if we push it out into July, we get full square around that July 10th area. So the key level here is right there. 18, 638, call it.
Right.
Stay above that, it's bullish. We get below it, it's suspect. And I just drew this 180 by 180 in to show you, potential time and price target up here, which would be 4th of July. So we'll see. We'll see how it plays out. Let's take a look at the weekly. Weekly, we've had this ABCD target in for a while, and that is around 19,725,
Mm-hmm.
which if you go back to the daily, puts us right about up in here. So a little more than an eighth above, more like a quarter above that square. And that would be pushing towards that, 180 by 180. But the key thing, look at the test last week, right? The low was right on the full square. We reversed, took out the high this week. That's bullish on the weekly basis. As long as we can stay on top of this 90, it's bullish. And that's at about, call it 18,190, 8,200, 18,200.
Right.
That's the key level here. And then let's take a quick look at the monthly. The monthly, we're still battling, as we have for 4 months now, battling with this full square. Now we've got a close over it. It's the first time we've had a close over it. Next week, we want to see if the low can stay above this, 18,780 area. Then we're bullish on a monthly basis. And we open up, sort of a big move, 21,000. So that's the next key thing. I wrote in some timing here. This week is 20 weeks, 20 months, sorry, from the October 22 low. 52 months would be in July from the COVID low, which would be the same as 101 months from the 2016 low.
Mm-hmm.
So there's a lot in there in the next month or two on a monthly basis from a timing. So, we're in there. It's just we got to figure out based on price action, how much higher we're going to go and, where we're going to fail. And we know the levels now. So we just got to watch the levels to see how it plays out.
Mm-hmm.
Anything to add here on the NQs?
No, no, but it just seems like it needs to push a little higher to tag all those prices, right?
Yep.
Levels, yeah.
A little bit higher would be really nice. Like if we could tag that 270, it would be clean, a lot cleaner. So we'll see. We'll see how it plays out. Let's jump over to Bitcoin. Sort of the bullish bias that we have on Bitcoin is based on, this structure happening. If you look left on a weekly or monthly chart, it's happening basically at the all-time highs. We keep trying we've tried to escape this upper rail here even this week, and we just couldn't do it yet. So maybe we're gonna, chop around and mark time a little more. As long as we're above this half square, it's bullish to test this full square, and that's the high. So I fully expect we'll see, you know, all-time highs on this thing before we're done with this leg.
Mm-hmm.
We just have to work through this, and you can see this correction has mainly been time and not price because we're going sideways, and that's pretty bullish after a move like this. Not a very deep correction.
Yep. Yep.
Anything to add here on Bitcoin?
No, you did a good. No, that's it. You covered it all.
Okay, let's quickly review the commodities. This week there was a lot of selling in commodities. The grains were sold. As Barry reviewed the metals, gold and copper, and I'll throw in silver. They all got sold this week. Not surprising. Last few weeks we've been talking about corrections in the metals. We've been talking about corrections in the grains. Let them play out. Let's figure out where it finds support, and then once we see a low put in and a higher low, then we can begin looking at, okay, it's the next legs on the
Mm-hmm.
upside is going to be
Mm-hmm.
starting on those because they're all looking very bullish longer term. This is just a part of the sort of inhale exhale you see in the markets.
Right.
The softs, same thing. We're seeing corrections there. Coffee is pulling back. It looks like it's doing an ABCD down. Cotton's trying to finish up and put in a low. Been going sideways for a few weeks now, but it's trying to put in a low. And cocoa, of course, we know is dealing with the hangover after the parabolic move. So nothing to do in the softs either. The ones I want to talk about today are the energy, which is energy sector, which is crude and nat gas, because these are looking pretty favorable, and I think we can, begin. Well, we've been in nat gas, but I think we can begin looking at starting to establish and watching closely crude oil and nat gas for a breakout. So let's start with crude. Here's your daily. And as you can see, if we go back to January, February of 23, even December of 22, we've been basically going sideways.
Mm-hmm.
Within, after this little deviation here, we've basically been in this half square here between, this high here
Right.
and the low here. We've been on this half square. And we came down earlier this week, pretty sharp move down on Tuesday. Wednesday, a small little bar poked below the half square, and then we popped right back up above the half square, and giving us potentially another higher low here. So I like the price action. It came down to your 73.50, which is, equivalent to my half square here, which is around, 73 and three quarters. And so this area of support is held, and it looks like, we're going to at least push up and test the top of this range now that we've got this structure here. Want to see any pullbacks getting a higher low, obviously, to confirm that. But
Mm-hmm.
that's the play. And what I'm thinking is because this thing has been sideways for so long, if you're buying at the bottom of the range, we might get lucky and catch a big breakout. And that's always possible. Where this thing breaks out of this range that it's been in for the last, year or so, and then puts the next leg higher in. So I think it's worth paying attention. Let's jump over to the weekly. I want to show you a couple of things here. High to low, and this is the high on the Russian invasion of Ukraine to the
Mm-hmm.
low we had May of last year. That's 60 weeks. That's a good number,
Yeah.
right?
Yep.
Since
Yep.
that low, we've
Especially
made
for
a
crude.
higher low. Now we still don't have the second higher high yet because we're in this triangle. But again, once this triangle breaks, remember this is weekly, this is where you're going to get power. And the triangle is coming, right? Like if you look at the apex of the triangle, it's just above this half square. So we're sitting in a decent area to give us a launch. Now it may frustrate some more, like what we play for is from here to the move of the top of the triangle. And if we get that, right, then you take some chips off the table and see if we break out. You don't break out, then we could come back and test it again and get another higher low. But this is one that's boring, been frustrating people. Nobody wants to talk about it or is interested in it. So we want to pay attention. Let's take a look at the monthly. What I wanted to show you on the monthly, and you can get a better view of where this triangle is happening. So here's the triangle. And basically we've come down and touched the bottom of the triangle this week. But look where the triangle's forming, Barry.
Mm-hmm. Mm-hmm.
Right on top of all this.
Yeah.
And again, I'm not like trying to go to the gold well too many times, but that's the same pattern we saw in gold. And we're seeing it in a bunch of different commodities where it's triangulating on a big time frame on top of previous support, after a sharp pullback. So we just want to be watching this because we want to catch this move. Because this move, I think, is going to take out these highs, because we'll have this higher low structure to go off of. The other thing is we're above the one by one
Mm-hmm.
off of that low. So that's a good longer term thing. Maybe we got to burn a little more time before we break out, but that one by one being above that is bullish. Gann likes that one by one. Anything else to add in crude? I know you covered it, but anything else looking at the monthlies here?
Not much other than, I mean, you covered the basics, which is, as long as we're above that 52, we're in markets in very good shape. And I think, it's a level where you can bounce from very quickly
Mm-hmm.
in a flash if we have to.
Yeah.
And I think the triangle is something we really have to watch. There's no question about it. So,
I mean, and anytime you got to watch triangles, but it seems like in the commodity complex, we've been seeing a lot of triangles and getting explosive moves out of them. Cocoa, gold, silver, copper. I mean, the moves out of these triangles in this environment have been really, really explosive. So we want to pay attention.
yep.
All right. Lastly, let's go to nat gas before we cover our interesting end of show topic. And what did we get in nat gas this week? Well, got another higher low. Tested this full square, and
It
today
broke
we
out.
pushed through.
Yeah.
Yep, and it looks like it wants to break out next week. And if we do, the next move is up to the half square here in the like 342 area. And that's our next target. And this is kind of what you want to see, right? You get a high, you get a low, it meanders around, but it doesn't make lower lows. So you could say this is a triangle or a channel. You break out of it, you move, and then you pull back with a higher low. And then we reverse. This is bull market action on a daily basis. Let's jump to the weekly. Look what the weekly's trying to do. We got to close above the half square. That's very important. That 271 area. We're above that, and we're breaking out of this triangle. Trying anyway.
Mhm.
Next week, love to see follow through. If we could get follow through and actually break out, that could give us some power. If we fail here, you got to figure you're going to have some sort of pullback. But look, once we hit that rail 3 weeks ago, we didn't get much of a pullback, and we couldn't even get back to the apex, not even near it.
Yeah.
So settling above this half square next week, if the low of the next week is above this half square, that opens up the full square, which is again 370. So it's looking good on a weekly basis. Let's check out the monthly. Monthly, I wanted to show you how we were holding the one by one here, Barry.
Mm-hmm.
And now we just this month so far we're on the 2x1.
Right. Looking good.
And this thing can ramp. I mean, 4x1 and 8x1 in this are not a problem when it gets going.
Mm-hmm.
And so, the nat gas looks good. Crude looks good. I especially like it because nobody's interested in it right now. It's been so boring. And
And
that's
I'm sorry, just on nat gas on this chart, you
mhm,
see, if you take this week's high
mhm.
and you draw a trend line up, other three little bars to the left,
Yeah, right
that's,
here.
once we break that, if we could take off. So that's definitely something to watch, I think.
Yeah,
Um,
that's probably equivalent
nat,
of the
nat
triangle on
gas
the
tends to
weekly,
be,
huh?
exactly. That
Yeah.
line right there. So we're just pushed up against it.
Yep. And again, the triangles have been powerful in the commodities, so watch them closely.
Yeah.
Anything else to add here on Natty?
No, we're good. Other than, it's going to
Pay
be a good
attention.
trade.
Yeah. The topic for today, the ending show topic is I think it's an important one because I've heard people struggling with it in the beginning when I was trading, learning how to trade. I struggled with it, and I wanted Barry to walk through an example is how do you trade, analyze one time frame, get a setup on one time frame, and then enter on a different time frame. How do you work with multiple time frames and manage a trade? And I think you're gonna correct me if I'm wrong, but I think you're gonna go through an example and show people how you do it, right?
Yeah, I'm going to give an example just to connect all the dots.
So there I see the 30-minute and the 4-minute
Mm-hmm.
ES.
So you were saying?
So I think this is a really important topic because not understanding how you're using each one. Like if you say, oh, I trade the 30-minute, but I enter on the 4-minute, but I'm using stops on a 4-minute basis, and that's going to screw you up if your basis of your trade is a 30-minute setup.
Mm-hmm.
And so understanding the interplay of the different time frames and how to use them properly, I think is really useful. So that's why I wanted you to go over this.
The funny part is there's lots of ways to slice this because there's lots of ways to divide up your times. It could be the weekly and the daily. It could be the daily and the 4 hour. It could be the 4 hour and the 30-minute. You know what I mean?
Hmm.
So, but all the combinations work well. But I think what you want is you want a higher time frame you can really count on far as support resistance goes. And since we work with levels and time and price, I have to I have to work with an example like that. But there are lots of ways to do this. You can do this with indicators. You can do this in all kinds of other ways. But indicators are a little bit tricky, to say the
And they
least.
lag.
And they lag and they're tricky, and just all kinds of problems with that. But I would encourage you guys to look into Gann methods and geometry and use those methods like we look at every week. So what I wanted to do is, I'm posting the fuse lines and things on the X, which is really for day trading, right? And
Hmm.
which, let's say 5 minute, 15 minutes or less. And then I post a 30-minute because that's good for people that are, either trading the 30 or even 4 hour, because 30 could be sort of the trigger for that.
Hmm.
So when Ben was asking about, hey, do you want to do a little spin around the multiple times, I thought of it, well, 30 and the 4 would make sense because, we post stuff that you guys can relate to. So, well, let's take today. Why don't we just take today, for
Take an
example?
example, yeah, from
Yeah,
today.
it's just today. So we're not cherry picking. It's just, here's what happens. And then we can actually go backwards and look at the week. How about that? You want to do that? That way we can see what happens.
From an editing standpoint, you have 10 minutes left, so you got to make it
Do
quick.
we? Okay.
Yeah. All right.
All right. I'll
Go.
make it. Well, yeah, I'll do it in 5. Let me see. All right.
Yeah.
So basically what happens is you want the larger time frame to be reliable as far as levels go. All right. So that's why in this case it's a 30. And we like the levels, we like the squares, we know they're reliable. And I'm just using the same square. I think this is the same thing you guys had last week, just taking it up and looking at it. We looked at this low, and I'm just walking through the higher time frame so you guys get a sense of that. We saw this was support. If it broke out of this level, 52.39, market stronger. So this would be the long part. And then resistance around 53.04. We hit the resistance here. If it can hold above, fine, we can go higher. But did it hold above? Not really. We hold about a little bit, and it came back down, back up, couldn't hold. And if it gets below that, we're looking for weakness, right? So potential weakness, broke again, retest here, and back down to 52.75. So and back to the support line here. So basically say, you can see how the market goes from resistance, came down to a little bit below the support. This is where we're putting the triangle in, kind of wiping everybody clean. But then we went back up here at this level. When this was happening, we were looking at 52.75 to be sort of the mean reversion point, right? And that was happening. That was happening. At some point, it was going to break out. So we were going to trade the side of the break. And so we got the break, went to 53.04, held above, went up to 53.25, got above, straight to 53.64. So that's the higher time frame, right? That's how it moved. And which points would you choose to trade? Well, clearly we're using price and time. We want to come off the corners because that's where the least amount of risk. So coming up, okay, how would you know to trade this or not? I mean, you might have a lot of questions. I'm trying to be as practical as possible. And the reason we stopped here, we had a level 52.10. This has been here for a long time. If you guys go back and check. So we stopped there. And once we stopped, inside bar, if you're doing short term, this is the 30-minute stop. We want to get on the 4-minute and take the other side. So we'll take a look at this trade. All right. So this is on the 31st. Now, once that gets going, the next major level will be 53.04. What happens over here? Well, we're not looking to buy long because we just banged up against resistance. So here we're looking to see, well, yeah, it's probably going to pull back. What kind of correction, right? Is it going to correct, a very shallow correction, which would mean it's very bullish, or are we going to have a deeper correction? All right. So then we got a deeper correction, went to the 50%, 52.75, came back down, higher low. Now here we're doing the triangle now, and we called this to be, this to be mean reversion right about in here. So we're starting to wrap around that. So we went to resistance, came back down to support, back up, we're wrapping around 52.75. Not much to do there other than to use just a 4-minute if you really want to hell bent on trading this. So we were really looking for it to break out. We've got the break. So what's the next trade? You can trade the break, then we go up to resistance level, right? So what happens here? Well, we pulled back and we settled above right here. And then we basically held it overnight, so holding it above 53.04 means, so when we say if it holds above, it's bullish, this is what we mean. It's bullish because here it didn't even touch it. And then, close to the open, we came up, touch it, we had that news kind of a washout. And following that, now we know it's holding above 53.04 and we're making higher lows. We cleared all the bottom, we broke out of the triangles. You got to follow the storyline here. If that's the case, we want to get long right in here, right above 53.25, so somewhere in here, because that's low risk. Why? Because if we were going to go down, we would have already gone down. We didn't. We're pushing, and we held above this. That was the first sign. And as we're getting above this, that's a great place to get in because much lower risk. And there we go. From there, it went straight to the midpoint, 50% level, which is resistance. So we're not looking to buy this. We're looking to cover it, from where that last leg was. So in here, can we look to sell? Yes, you can look to sell if there are other things are indicating that it's going to be weaker. We're looking for some kind of a correction. And I think I posted, if it can hold about 53.48, it's in pretty good shape. So there we were tightening up, and you can potentially sell and buy and sell. And then we came to today. It was kind of messy, right? We knew that was a false break and didn't disappoint, sold off fairly,
right.
Really hard and fast. So then, again, we held above 53.25. That's the key. Inside bar here. So we talk about if the high gets taken out, you can take the long side. So here we go. We went back up to 53.64. Now we know this is resistance, right? I mean, for a couple of days. So when we get into here, you can always want to unload until we can actually get a pattern above it. So here we really don't have any pattern, just a couple of spikes. And we know there was news behind this. And then what do we have here? Inside bar, right? what happens when we take the low of the inside bar? Well, we want to try to go with it. So that was the last try. It was almost like 3 drives, and we dropped below the 50% inside bar again, took out the low, and we came into the close. Okay, why did I do that? I wanted to walk you guys through it. So that's how you want to treat the higher time frame. You want to know exactly what's going on. You want to see the structure. You want to work with the levels. Now, once you do that, lower time frame becomes just the trigger. So here's a real simple thing would be today's low. We ran up to 90. So 90 ends up being pretty much 53.75, right up into where our zone was,
Right.
which we've had for a long time. But in this case, it just happens to be there.
Mm-hmm.
So that was the trade. Now, coming off of here, sure, you can sell, but you don't know how far it could go. But if you want to do the short side, you can take a 1x1, 1x2. You can set it down. And I can go next time into how to trip these into trades. Basically, you want to follow the lows. See how you can get tripped in. So if you follow the lows, the last low is right here. And there we go. And we broke it, but it didn't break down, went back up again. And you can move it to the next low, right there. And it broke that. When it breaks the 90, there's a place to take a trade because it's your risk is very well defined. It's this high. And we know if it breaks that, it's going to go. So that's how you can trip into the trades using just trend lines once you know the higher time frame structure.
Because you knew that the higher time frame you were banging up against resistance.
Exactly. We knew it here. And we knew here, I mean, it's a little sloppy because it's a 90, but
it's nice though.
So that's an example of using the lower time frame. And you can use trend lines in this example. Like I said, there's lots of ways to get tripped into a trade. There are a lot of ways to set up design system.
But the reason you were looking to short on a break of the 90 on the 4-minute was that you knew on the higher time frame on your 30, you were right up against resistance.
Exactly. And we knew that was falls, and there's other things we know, right? You're looking at the other information, we can see it's not really ready to settle up above. And if you look at the lower time frame, it's really kind of telling you that. Like so here, and we know generally, if you run 90, you take another eight into that, that's about the max run for that period. So that's, so we know the 90 was pretty much capping it. Okay, fine. If you can get above, like if this is where you say hold above, if you can hold above, then great, then to move on higher. And dropping a trend line there would make sense. And, if you drop it everywhere, why would you want to sell it anywhere? You only want to work with the areas once you know that's resistance in this case, right?
And that's resistance not only on the 4-minute, but from the higher time frame. And that's the important part of how you integrate the two time frames.
Yeah, well, resistance is definitely on the 30 and even higher. So here, the 90 would be sort of a normal move, right? Normal move in the ES, let's say. But we push a little higher, Okay, there's a little bit of activity going on. But then you want to see, well, if you guys can really take it higher, we're going to go to 54. If not, we're probably going to go back and test, at least 50 because we're going by half squares. So here, that's what happened, right?
Yeah, you got a perfect move from 90 to the half square.
Yeah. And that was one. And the risk is, that break. So it'll be right on top of here. So you're not risking a whole lot.
Basically risking an eighth to make a half.
Yeah, pretty much.
If you look at it.
Yeah, that's a good way to look at it.
Right.
And so, the point is that lots of ways to do it. So it really comes down to, I think it really comes down to the skill set and using the tools often enough. So
by the way, that's 4-1 for anybody that's doing the math.
Right. So here, let's take, let's just take the swings. If we go from 6.6, I'll just mark off the calendar. So that would be here. We're coming off this low. That low. Again, what happens? We got up to 50%, then we're kind of crawling, really not moving anywhere, right? And if you look at here, so that's our resistance. So we're not going to mess with that much because we're right up against that. So here we're crawling around, and then here we got under it. You see that under the under the 50%. So here that's where you can drop a line if you want to trade that. That's where you would drop your 1x2 or 1x1, 1x4, depending on your scaling, right? You'd go like that. And you can see how perfectly it came in, and your risk is right there. Sure, the trade only went, quarter of a square, but that was a square. And if you go from that low, here's this morning, right? Then we traded right up into it. Here's the other thing. The reason, I wasn't involved in any of this here.
Because that's news.
It's news, and I'm not that young. I'm not
or
18.
reckless.
Yeah, or reckless. But the way to do that is, you watch, that's the 50%, and this is your trigger chart, right? This is your short-term chart. And if it breaks above and it comes back down, you just sell that low. You sell that break.
Yep.
And right there, you sell the break right there. And that's how you get tripped into that trade. Why? Well, because you're working with the 50%. So in this system, we're working with levels. So if you were going to work with levels, then that's how it works. If you want to work with indicators, you can do that. So there's nobody's stopping let's just say your creativity, right? You can set up with something that you're comfortable with, and that's just how you'll have to work it. So let's take this high that was on the 6th, the high.
That was yesterday morning, right?
Right, exactly. Yeah, it's a high right there, right here. So what happened there? We went down to 50%. Boy, after this, everybody's gonna be trading using the squares, day trading.
That's
right?
good.
Yeah, well, we're not joking. So here's the 4-minute. We came down, squared out 45 by 45, had a little bounce, and here is the whole
false break,
kind of false break, the flush. So how do we know it's a flush? Because it's the immediate reversal, right? So we get immediate reversal, we get the inside bar, almost inside bar, reversal. Here's a little triangle, broke the triangle. Well, there's the upside, went all the way back up to almost to the 90, and then worked itself after the false break, came all the way down to full square, full 90. So that's round trip, right? So that's how you'd look at that. So that's how you know that was support. You know what I mean? Like earlier I was saying, well, we had support here. So somebody not knowing that, well, how do you know? Well, that's how we know.
There it is.
90 down from the high. That's how that lines up. So what else? It's just basically the same thing. I want to just show you guys a couple of examples. So let's here's 6.3. Let me put it here. And sometimes you have to switch your squares. Market runs into different vibes sometimes. So sometimes you have to use a 72, maybe 60, 90 and 60 is pretty much the same thing. So it depends how the market is running, and you want to kind of accommodate. So this was right here, that low, and I said it came into the support right there on the 30-minute right there. So once it comes down into that, and if I put the square up here, we'll find support down below. And well, let me do that. How about that? Well, you can see it. I don't even have to put the square down.
Right, it's there.
It's there. So that was 135 degrees down. And so once you hit one of these levels, you want to see, well, is it going to bounce? Is it going to reverse? Or what's it going to do? Well, it bounced immediately, right? And
there's a good chance because you're showing a higher low on the 30-minute.
Exactly. That's the point. And you want to take the risks at those levels. You want to take it at the levels where there's a higher probability of the side you're looking at is going to work out, right? That's the whole idea. This was a little bit wild, but normally it's the same setup, right? You don't have to try to catch a knife. But what happens is
wait for the trend line breaks.
You can wait for the trend line break. And if that was too wild, which it was, you can wait for the 50%. So we got to, when we look at the dailies and we talk about, it has to get above and hold above and all of this, we talk like that because this is what happens in real life. So here we got above, held above. Okay, great. If it held above, then you don't even need a trend line here. You're just getting along here anywhere. Well, here's the inside bar. Break at the bar, you can get in. There's your risk, right? So it's about an 1/8, and it went all the way up to the 90. And it didn't. In this case, it didn't. Is going into the close, so it didn't stop at the 90. It pushed right. Pushed all the way up. So that was a move up. And so what I talked about there was how would you trade that low? Because I talked about that in the story about the higher time frame. So in this case, Yeah, if you're super experienced, real confident, you can take that. But if you want to be have a longer life, you can trade off the 50%
I
and
mean,
catch.
Mary, we could do hours and hours on this. I think this is a
Yeah,
good
yeah,
this is a
that's the
good
thing, right?
introduction. This is a good
Yeah,
introduction where just to give you the Reader's Digest version of it is you look for support and resistance on the higher time frame, and then when you drop down to the trigger, you use that as a basis for entering at hopefully an extreme where there's support or resistance if you're selling, support if you're buying, that you can trade off of, trigger into a trade.
yeah,
Because
and you don't want to.
you've got the higher time frame at your back, and that's the key.
That's the key. You want to have real confidence in your higher time frame, and the lower is just to manage your risk.
Right.
And once you know both time frames, it becomes a lot easier. Here's another really quick one. Yeah, I'm not going to continue, but the real quick one. Here's just to show how you can measure yourself out, right? So
Mm-hmm.
for lower time frame came into the 50% bounce, came into 50% lower, right? Lower, didn't quite take off. So messing around here and then drops not quite to the 90, but came down very close to the 90, back above. So here, when this happens, we have a little bit of action around the 50%. You want to watch that. So what happens? We drop below it. All right, higher lows, got back to the 50%, got above, bunch of volatility. You're still watching the line, came down, really didn't follow through, came back up. So here's the point you want to watch, right?
Mm-hmm.
You see that right there? Right there.
Mm-hmm.
Got above, came back, inside day, inside bar. So right about here, if it's going to continue to move higher, you can trade that because we just did both sides. We just flushed everything out. We came back to check this. This is support.
And notice that on the 4 minute where Barry set the square, it's that 5304 level. And go look to the left on the 30-minute chart. What's at 5304? He's got a line where
Right,
he
right.
knows that's resistance.
Mm-hmm. And so right there, yeah.
Yeah.
So you have to incorporate that. I mean, normally you would transpose some of these lines onto your lower time frame just so it's easy
So
to
you
track.
have them, right?
Yeah, but that's the idea, and you want to stay with the same tools. You don't want to keep changing tools. The more you use the same tools, the easier it is for your mind to understand it through that lens.
Mm-hmm.
And then structure and everything else makes a lot more sense, and it's easier and easier. And clearly you can do this on paper first, or any
Mm-hmm.
system actually. So yeah, that's a little bit of a thing about how I look at it, and you can do the same thing with 4 hour, 30 minute, 4 hour, lower time frames. But
Yeah, but don't try and do like a monthly and a 4 minute. That won't work.
that won't work. You want a relatively good combination where,
Close time frames, right?
yeah, close. But you don't want to go like 4 minute, 1 minute because that gets
No,
crazy.
no, it's too
5 minutes
messy.
about the lowest.
Right, right, right. 4 or 5 minutes the lowest, and then you can use a 30 or 60 minute as your sort of
And all
got
it does is
roadmap.
lower your risk, right? Because
Yeah,
here we could clearly trade this using 30-minute stops. But why, if we can lower the risk using a four, why risk more?
right.
Right. So that's the idea.
It
Anyway,
just gives you a better expected value of the trade
yes,
because it's
and
better
much
risk
tighter
reward.
control and a
Yeah.
lot tighter control of your stops.
Yep.
So,
No, that's great, Barry. I'm glad we talked about that. We'll like a lot of the topics we discuss, we'll revisit it and different angles and try and give you guys different perspectives so that you can try and incorporate this stuff into your trading if it fits with your style and your risk profile.
yeah.
The great show, a great show. I really like the show today because we say this a lot, but you can see why next week is important.
Mm-hmm.
You can see through the various markets that we covered it with the levels that we covered and the spreadsheet, you'll see the levels there. You got levels and timing, and that's what we base our work on is price and time. And so we've got that coming in. So we got to really pay attention. It could be nothing or it could be major.
No,
You
it's
know,
something. It's
yeah,
not going to be
price.
nothing.
No, it's not going to be nothing.
Yeah,
That's right.
because I mean,
Price is going to tell us.
yeah, well, price, look at already, right? If we really notice, we talked about it today, but I don't know how many people would notice it. Here we're looking at the price action of the S&P, right? I mean,
Mhm.
look at this, right? And you saw bonds dropping 2 points.
Yep.
Like, boom. on a Friday with all this stuff setting up. So it's brewing. It's under the surface is brewing, right? So
Yeah.
so
And
yeah, something's
metals got smacked,
yeah.
grains got smacked. There was a
Mhm.
lot of money moving around
Yeah,
today.
yeah. So we'll watch that.
So listen, have a great weekend, everybody. Rest up and be ready to go. You got the levels, you got the timing. Let's um let's watch what price does, and then we can react based on that. Barry, have a terrific weekend. Great show.
Thanks, Ben. Good job. We'll see you soon.
And everybody, give us a like, ring the bell. You guys been helping us grow the channel this year, and we really appreciate it. So please, forward the link to your friends and people that you think would be interested, and help us
Subscribe.
grow the channel. We'd
Yeah.
appreciate that.
Yeah. Thanks, everybody.
All right,
Yeah.
take care.
All right. Bye-bye.